Good day, guys. Today I'm gonna be introducing you guys to Derive.com. For sure, most of you have heard about the broker. It's a broker that you use to trade mostly the volatility indices. These indices are the go-to for those traders who are starting out and those who don't want to be trading based on the fundamentals and want to strictly focus on technicals, which is technical trading. Which is good because I also prefer it at times because there's no disturbances here. It's only you focusing on your technicals, and if ever you can master technicals, then you're good to go. Nothing can stop you. First of all, guys, I'd like to say to you, when it comes to trading, you have to understand that there are people who are moving the markets, and the market will keep moving in a certain way because people are predictable, and regardless of whether it's only technicals or there's also fundamentals, just like in this case where it's only technicals, the market still moves the same way as in other markets like the stocks and also in forex or currencies. So today I'm going to introduce you guys to Derive.com. This is the name of the broker, and I've chosen these three instruments, or these three indexes or three indices, whatever you want to put it, intentionally, and these are the ones that I personally trade. The reason I don't trade the other ones is because they are difficult to calculate the lot sizes, and sometimes they require a huge account size. Sometimes they move in weird ways, and the minimum lot sizes for them are much higher. So it's a challenge because most of the people who are trading, they don't have 10,000 US dollar accounts or $1,000 account. They usually have 500 US dollar accounts, 300 US dollar accounts. Those are the account sizes that most of the people out there are having. So today I'm going to be showing you how to trade these and why I want you guys to focus on these three. There could be other ones that you guys might like here at Derive, but then as for me, I prefer these because I've tested them. I've been trading them since 2020, and I like trading them, and they're very predictable and they give good results if ever you're disciplined. Remember, the enemy of trading is gambling, guys. If ever you start gambling, that's when you lose money. No matter how good the system is, once you start gambling and not managing your money properly, you will lose money. You are bound to lose money. There's no other way, regardless of your knowledge and how good you are at analyzing. If you put 20% risk per trade, you're gonna blow your account very soon because you don't know 20% risk per trade. It's only 5 trades, and if those 5 trades go wrong, one after another, you're out of business. And I don't think that's a way of managing business, or I don't think that's a way of being a business. Businesses, a lot of businesses are failing because of that kind of strategy. They just go all out. You can't start out a business of selling chickens, and then with 10,000 rand budget, and you go and buy chickens worth 10,000 rands. What if they all die? There's a chance that they can all die. If they all die, meaning that you're now out of business. You don't work like that. So guys, what we do here is we're gonna be focusing on this volatility 75 1s, range break 100, range break 200. These are the best three that I trade on Derive, guys. I don't trade anything else on Derive. I don't like how they move. I don't like them. I like these three. There's a reason why I like them, guys, and I'm gonna show you. About to find out why they are one of the best to trade. And oh, again, I forgot to tell you, these are open 24/7, by the way. They are open just like today. It's a Saturday of the 12th of November 2022. They are open, as you can see. So I'm gonna go ahead, guys, and enter. I'm gonna start volatility 75. Let's enter. Let's go to properties first. These are not really important for us, but yeah, you can always check them on your broker. It's open 24 hours, of course. So we're gonna enter it, right? This is volatility 75 1s index. We're in the 4-hour chart, but then I'd like to start out in the monthly chart so that we can get the background of what every instrument that I trade. I want to get the background before I can start doing things. I want to understand where it's coming from and where is it going. So in the monthly chart, there's not much that you can see, but then if we go to the crosshair and check here, you can see that the first bar or the first month It was the beginning of June in 2020. That's when it was introduced to this broker up until this day. So okay, now we're gonna skip that and go into the weekly chart. So this is our weekly chart, as you can see. Going back slowly. We already saw it in the monthly chart in any case, just that it's a bit slow to load. I don't know what's happening, but it doesn't matter. Let's just take it as it comes. So here it is. It has been dropping. As if you can have a look at it, look where it's coming from. It's actually coming from levels such as 200 and something. How much is it? 214,000, and now it's sitting at 13,600. Let me say 13,700. So it's coming a long way. So we have to understand where the pair is coming from before you can start trading it, and understand where are the important levels during its lifetime or its existence. Where have there been some important levels to watch? Because the historical data is also important, even though it's historical. But then remember, historical data always comes back to show itself in the future. So the historical data is going to help us to understand where there could be resistances, or reversals, or where could other people be taking their profit because they know that there's a resistance or there's a support. So in this case, we can see here, let's go to our symbols, let's get that line. You can see that around this level, 14,020, there was once a resistance, which was this day here on the 17th of October 2021. There was a serious resistance there at 14,006, as you can see by our fractal up there. There was a strong resistance there. So that's where a lot of people sold again heavily. So the question is, are they gonna sell heavily again here? Because now the market is trying to retest it, but then it went to 13,021, and this week it's trying to retest that level. The question is it gonna go through? We don't know. So you see how these things work, guys. We have to look at the historical data to understand what can happen now. So this is a supply zone, guys, which is where people are selling heavily. So the question is, are they gonna sell heavily again today? Let's go into lower time frames. We're gonna be looking at the daily chart. You see, as the daily chart, what happened there? As it was railing, let's go back to the weekly just a little bit. The market has been railing from this time here, from the 24th of July this year. It has been railing, rising and rising and rising, going up and up and up until that level, the guys that were highlighted. Then it went back down. This level, they sold it. As soon as it hit that level, they started to sell heavily. And as they sold heavily here, it came down here to what? 10,699. Then the following week, which is the week they were coming from, they bought heavily, and they even went above the previous week's high. So what does that tell us? It tells us that now the buyers are trying their luck again to break this resistance. The question is, are they gonna be able to do it? Me and you don't know at this stage. Hence, we're going to it step by step. Don't rush into the making money part. We have to understand the basics first. So I'm gonna help you guys step by step. Gonna be trading this coming week together. I'm gonna be posting videos every day. So okay, on the 4-hour chart, as you can see, it went up. It went up, then it came down. Hence the red candle here. But then now it's trying to go up again. So as you can see that it's trying to go up again. Guys, yeah, I forgot to tell you. Let me go back to the weekly chart. These are the moving averages that I use, guys, to determine the direction of the market. Yes, you can see the direction of the market even without the moving averages, but then I prefer them to be there because they help me, and I'm gonna show you why I need them. So here we've got the 40-week moving average and the 20-week moving average, guys. I need them. They help me in the weekly chart to determine things that are important, just like the crossovers, the change in direction, change in momentum. So now we can see that now they're actually crossing. These moving averages are actually crossing for the very first time since the existence of this pair, because they've been going down up until now, which is actually this past week they were coming from. That's when they started to cross. As you can see, they're equal. They're all at how much? 10,033, both of them. They're equal, they're crossing, meaning something is about to change. Now it means that the volatility 75 is about to change the direction. Now it's now going upwards. Now buyers want to buy heavily. So this is the most recent bottom, and you can see the price is way too far from the most recent bottom. It's trying to challenge this resistance here at 14,000. So fine guys, let's go to the daily chart. In the daily chart we've got the moving averages, of course, but then they are not the same as the 4-hour chart. Here we've got the 8 moving average and the 20 moving average. So as much as the 8 is above the 20, it means it's uptrending, just like that. If the 8 is below the 20, it means it's downtrending. Simple as that, guys. So yes, we can see that, but then these are some of the things that are helpful, and you'll find out in the future very soon. I mean, so yeah, we're gonna be going to the 4-hour chart. We keep going down lower, time frame by time frame, up until our specific level that we want to take action. In the 4-hour chart, you can see we also have the same moving averages, which is 8 and 20 again. Then we go to the 1-hour chart. We also have the same 8 and 20, and they're gonna help us when it comes to buying. We're not buying yet here, guys. We're not even talking about buying. We're still way too far from buying things. We're still explaining the concept of the strategy. And we also have the 30-minute chart. In the 30-minute chart, we also have something different. Yeah, we have the 12 exponential moving average, and the 100 moving average, and the 36 exponential moving average. These are the ones that we have here in the 30-minute and the 15-minute. They're the same. So these are the time frames that we trade when we want to enter trades during the day and not hold trades. Let me say for day trading, which I don't usually do, but then if you want me to help you with that, I can give you signals. But then I would prefer the 30-minute. The 15-minute, I don't want to be sitting watching the screens the whole day, guys. Life is not about that. That's not why you went into Forex. We didn't come into Forex to be sitting in front of the screens every day and the whole day. We want to enjoy our lives, spend time with family, go on vacation, and do things that are important in our lives, than to sit in front of the screens or to be in an office for the whole day. So okay, guys. Now, so as you can see now what's happening. So if you can go to the 5-minute chart, the 5-minute chart, I don't have any indicators like moving averages because I don't usually trade them. But then if I do trade them, then I'll just trade them using the price action. But I don't usually go there because they're too fast. I don't want to be sitting here waiting for things on the screens. I want to set up my trade, then I leave and do my things that are important and go about my day. So guys, now you're asking for sure, where will I buy? Where will I sell? So fine, going to the bottom line, let's look at the weekly chart. What is the weekly chart telling you? The weekly chart is clearly showing us a strong uptrend. Why is the strong uptrend? Let me show you another reason why this is a very, very strong uptrend. Let's pull our Fibonacci's there. I'm gonna pull my Fibonacci from the bottom right up until the top. Okay. All right. If you can see here, there's something important here. The price rose from this day, from the 24th of July. It rose up, didn't even correct whatsoever. It has been green here, guys. It has been green. Forget about this little red bar. It has been green for these weeks, all the way up until it reached the top of how much? 13,921. Then it retraced, or meaning it corrected. It did the correction. But then look at the correction. Look how weak the correction was. The correction was only tried to come between 23.6 Fibonacci and 8.2. This shows that the trend going upwards is very strong. If ever it was a weak trend and there were less buyers, meaning this thing could have actually corrected all the way to the 50%, or even here at 618, or even here at 786. But then it only corrected to where? To here, to between 23.6 and 38.2. Then what happened? It shot up, meaning people are keen to buy it. So what does that mean for us? we're in a strong uptrend here, and we must be looking only to buy. There's no time to be selling here. We are looking to buy. So the question is, where do we enter our buy for now? Because yes, we're still in an uptrend. We've been buying all along, we've been making our profits. Now where do we enter? Yes, now that's when we're gonna be going time frame by time frame to get that perfect entry according to our ultimate wave strategy that we posted in the channel, that you must actually go through and learn it so that you can understand how the system works. But then I'm gonna show you where we're going to enter now. Okay, let's go to the 1 hour chart. In the 1 hour chart, we're gonna be looking for a pullback. 1 hour chart, yes, as it rose, as it was rising, it goes up, it goes down. Okay, let me just do this for you guys. I want to find something so I can draw. Let me try this arrow line. Okay, no, it's not working, this line. As you can see, guys, what's happening is that we're looking for this pair, this volatility to keep rising. So the question is, where are we gonna enter, or where are we gonna enter? Where are we supposed to enter? As it moves up, I'm gonna just draw a few up, down, up, down, up, down. When we're here, guys, we look for something called a ringed low, or a lower high. We're in the 1 hour chart, remember, guys. We must look for a lower high as the price comes back to the moving averages, whether it comes back to the 8 or to the 20. But then we must look for something that did a lower high. Now we go to a lower time frame. A lower high in this case, we could have found it where? Here is a lower high here. We could have entered here at fractal high at 13,712, or we could have entered here, going back to the 1 hour chart, we could have entered here at the high here at 13,544, because it's a lower high before the green bar. Forget about the green bar. The lower high here was this one. After the end of this 1 hour candle here at 12 o'clock, the high was how much? It was 13,544. We could have entered there. As much as the price was opening here in this bar here, we could have placed a buy stop at this high, here of 13,544, and our stop loss right here at this fractal low of 13,298. If we're gonna be conservative about it, we could have placed our stop loss right here at what? At 12,905. Then we expect the price to shoot all the way up, because we can see that the momentum is still high. We can expect the price to shoot all the way up, all the way there, and our stop loss could have been here, and our entry could have been somewhere here at 13,544 that we're talking about. So guys, remember, here we're only looking to buy. Don't try to sell anything. We're looking to buy. It's an uptrending market. Don't try to fool yourself into selling anything. We are buying. We're not saying it's gonna keep going up. It can always enter us into a trade, then the next thing it goes against us. That happens all the time. So hence we're saying we use proper risk management. In forex, guys, it's a game of It's a game of probabilities. It's not game of certainty. There's no certainty here. The price could actually do this, guys. Go down like this. It can happen. It can happen. I'm not saying the price is gonna follow the red arrow here. I'm not saying the price is gonna follow the red arrow. It might not follow the red arrow. It can actually go down, but of course not gonna come down in a straight line, but it can actually come down. Why? Because remember, we're still in a resistance there, guys. It's not gonna be simple to just break that resistance there. It's a strong resistance, as I showed you here, guys, at 1400. So the price might actually go there at 1400, but then you know what, actually try when it gets to 1400, actually fail, then comes back strong down. It can happen. So guys, in a nutshell, those are a few trading insights that I have for you. Please guys, understand that trading, you have to manage your risk and make sure that when you trade, you discipline yourself and don't expect the market to give you things. The market doesn't owe you anything. Make sure that you manage yourself emotionally and you're in a good state of mind before you can trade. Don't rush and don't have unrealistic goals or unrealistic expectations in this industry, because it doesn't work like that, guys. When you are here, you must know that you are doing this as a profession, as a business, not as a gambling sport. Because if you want to gamble here, you're gonna be wiped out. If you want to gamble, you'd rather go to the casino. Yeah, there's so many gambling games that you can play there. So yeah, there it is, guys. For today, I'm gonna be showing this volatility 75. Then tomorrow we're gonna be doing break index 100 together with break index 200. Okay, so guys, they're very beautiful. I love them. I love trading them on the 4-hour and the daily chart together with the 1-hour chart. They give consistent results, guys, and there's no disturbance of the news here. So guys, let me know if you like the video, and thank you for watching. Happy trading, guys. Thank you so much.